Well, the U.S. economy is in its longest expansion ever recorded, and all signs point to the boom continuing throughout 2020. But the global economy is not seeing the same strength, with the IMF downgrading its full-year forecast earlier today. Talk about that a little bit later. What sets the U.S. We do want to bring in James Schenck, now the CEO of PenFed Credit Union, to talk more about that downgrade from the IMF. What sets the U.S. apart even amid a slowdown globally, James?
This is a great opportunity for the president at Davos to really talk about the benefits of capitalism. I think he has a track record now with the lowest unemployment here in America in the last 50 years, a booming stock market creating wealth for many Americans, and individuals really buying homes and buying consumer products because they feel very comfortable in the rate environment and the economic numbers we're seeing here in America. So I think it's a good news story for America on a world stage. Where other economies are flat or are going down, the American economy has a record growth rate going and a strong opportunity for success in 2020 going forward.
We talk about that record-breaking growth seen here in the U.S. economy, but one sector of the economy that's been struggling to expand is the housing market, even amid really low mortgage rates right now. And that's having to do with high home prices. Why are home prices so high right now for buyers looking to enter the market? And are we possibly at risk for any repeat of the bubble burst that led to the financial crisis?
Now, what you're really seeing with home prices is nothing more than traditional economics, supply and demand. Demand for homes is up significantly. PenFed owns Berkshire Hathaway Home Services, PenFed Realty. So we see the housing markets across the U.S. Literally on a daily basis. And what we saw going into the fourth quarter of 2019 is demand is extremely strong, which drove up prices between 4 and 5% last year. So what you would expect is more people to move into the industry to start meeting that inventory shortfalls. And I think we saw the reports recently that December had the highest number of new housing permits, so which is housing starts, in the last 12 and a half years. So the market is adjusting where builders, which again hires lots of jobs, a lot of laborers to meet the demand for homes here in America. And it is fueled by lower interest rates, as you would know.
You're right. You mentioned the housing starts surging to that 13-year high in December, of course, as a response to the low inventory on the existing home side. We are going to get existing home sales data later this week on Wednesday. What are you expecting to see from that in the activity for the end of the year?
Yeah, what we're seeing in 2020, I think the Mortgage Bankers Association, their forecast is for about 3% increase in home prices, coupled with about a 3% increase in actual unit sales. So that's a really good thing for the economy, expanding the broader economic indexes, and it's, again, creating a lot of jobs here in America.
We've seen the stock market, of course, surge to new record highs almost daily, pretty much since the start of the new year. Wall Street closed today, but earnings season is about to get really busy this week. What are the key reports that people and investors should be focusing on this week?
Well, again, I'm a credit union, so we're not publicly traded. We focus on the retail consumer, like to say Main Street America. My only advice is the best economist is a historian. I think when you look at the economic fundamentals, the strong job market, openings across America where there's more job openings than demand, the amount of laborers to fill that demand. When you have low inflation, I think it was 2.1% average last year, 2.3%, a slight uptick in December. All these indicators are very strong for corporate earnings. Employers are hiring, employees are making money and reinvesting that money into their communities and into their technology and into their workforce. So I think it's going to be a strong 2020.
This current boom has, of course, been driven by President Trump's policies. Hypothetically, what could we see happen to the U.S. economy if a socialist candidate like Bernie Sanders or Elizabeth Warren were to win in November?
I only focus on the fundamentals, not about political elections. We've been very fortunate in the last few years to see some amazing growth. The fundamentals are extremely strong, but downsides to any economy is uncertainty. Psychology drives the economy. Consumer spending is the largest component of this economy, and so as long as consumer spending stays strong, and that starts with jobs. When Americans have jobs, when they're employed, they're willing to invest in a house, refinance or buy a new car, buy stuff, consumer spending on their credit cards. And at PenFed, we're seeing our consumer spending above in all three of those categories. Housing's up significantly, new car sales up significantly, and just this month alone in January, our closing closed and pending pipeline in real estate sales is up 15% over last year. So the fundamentals of this economy are very strong, and we've been around for 85 years. We grow with a strong economy with any administration.
All right, James Schenck there, the CEO of PenFed Credit Union. Thanks so much for joining us here on Wall to Wall to talk about the booming economy under the Trump administration.
Want to see more videos like this? Click on the link below and subscribe to One American News on YouTube, and call your cable provider and kindly demand that One American News is added to your lineup. Call and subscribe today.